Coffee time. Start in 2 minutes. Happy day. Happy days are here again. Yes, was the start of my last jam, so here it is again, another dope jam. Now that I gave you something that I know you like, consider me a new jack. New jack! New jack! G'day, mate. Oh, yeah, how's your mum? All right, so it's 9:02 in the a.m. Let's go! Let me remind you that trading's risky, not appropriate for everyone. Your past performance, good or bad, is not necessarily indicative of future results. Please stay small, stay humble, focus on the long term, and never risk money you cannot afford to lose. Hello, my name is Wayne. COVID. I'm a currency trader just like you. I've been doing this a long time. I am still in love. The only thing that's changed is I'm on like my 5th chair. Oh, my back hurts right now. Anyways, hey. I love trading. I love technical analysis. I love fundamental analysis. I love the struggle and the strife of being a trader. It's never easy, but if you get it right, it pays you too much. So it's a pretty good deal. I love the fact that I can be independent. I can be anywhere I want. No one tells me what to do. I can trade Forex in any country, in any cafe, anywhere around the world. And I've done it. I've actually traveled the entire world and traded from a laptop. Love it. So what a great opportunity, huh? But it requires hard work and effort, not until you figure it out, until the day you die. So you better fall in love with Forex as I have. So ask questions, get involved, take notes, treat your fellow currency traders in the chat with dignity and respect. If you're a spammer, we're not interested. Just letting you know, we're not interested. What else? If you want me to cover a particular currency pair, if you want me to do oil or gold or Bitcoin or XRP, someone asked yesterday, I forgot to do it. Sure, man, you're the boss. I'm just a humble currency trader. I'll do my best to address your questions. Bear in mind, there's lots of people asking questions, and I look at the chat a little bit, and then I do a lot of looking at charts and explaining, so I might not see. So please keep asking, or maybe ask again tomorrow, because I've been doing these webinars every single day on YouTube for about 12 years, and then many years before YouTube was even invented. So I've seen some things, I've experienced some others, and I'm willing to share. Sponsor of our community is tradersway.com. So if you value the Trader's Way in your life, then please visit. Okay, throw your diamonds in the sky. Please visit tradersway.com. They would like the opportunity to earn your loyalty and respect. That's all they're asking for. So these webinars they don't cost you money in the morning, but they are not free. They come with an obligation. You must visit tradersway.com, open up a demo account. And when you're in the back office, you can download MT4, MT5, C-Trader, a bunch of other things. But the thing is, when you're testing out a broker, you want to test out the execution speed. That should be fast. You should look at the spreads. They should be wide. You should, not the spreads, sorry. The spreads should be narrow. The swaps should be high and all that. And, of course, world-class customer service. Roll out the red carpet, white glove treatment for you. Tradersway.com. Thank you, Tradersway.com. Okay. Let's take a look at what's going on in the world. What is this? Okay, this is the pound yen. Okay. And what did we discuss? This is Friday's exit. This is Monday's sell, the best selling pivot that a bear could possibly hope for. Here's the tertiary test of resistance. And we don't know, but I would suspect that is an old man easing into a hot bath. No, of course, the euro is not a safe haven. Okay, all right. Yeah, Jim. Maybe there's just risk off, right, Jim? So anyways, yen's coming down. That makes sense. It occurred right on the first day of the month and has continued since. Right now, technically, we are in a range, but we suspected the risk off. Okay. All right. So, bearish integrity, well, that's for you to decide. Okay. You can see it is not trending up anymore based on our analysis here. Yes, there's still something going on here. That might be a different time frame issue. But the thing is, and because you don't know the future, you only have assumptions, right? So last week, here's the exit. And the exit was, well, on the last day of July, we're sitting on the August selling pivot. So you say, well, I don't know if anyone's going to sell there, but if I was going to sell, I would sell there, right? Like, I don't know if anyone's going to do it, but if I was going to do it, that would be the price. And of course, you also know the time, the beginning of the month, you need to be hot to go, HOTTOGO. So anyways, there's some evidence. Now, I think we talked about this yesterday. I said very often you get a double top of a double top, which means this is a double top, but it all started with this double top first. Is that true? Is that how you guys remember yesterday's webinar? Remember, it's only how you remember it. If you don't remember it, it didn't happen. The mind is a very interesting thing. And if you remember it differently, well, then that's what happened in your mind. I want to know what's in your mind. Do you remember the double top of the double top? Yeah. Yeah, boy! Yeah. Important, huh? All right. And that's a big but what we're looking at is we need to now say, is this the pound weakening or is it the yen strengthening? To see the relative strength in this, what I would suppose, and the reason I actually exited this trade up here, the reason I exited up there is I did anticipate, and we did talk about this being the sell, but then the full-on, full-bore macro contraction. So it's not just a little technical thing. If it reversed here, it has the potential to be a big reversal. Not just technically, but fundamentally. So that's what I'm actually looking for now. And by the way, if you happen to be a bear all of July, good morning. Okay? I'm hoping you are on that. And now you got to plan out your next move. If you're a bear, it's either going to look like that or it's going to look like that. So you better get ready if you're not on this one, okay? And you're like, well, Wayne, I know the double top of a double top on the first day of the month on the monthly M3, but I need more than that. What more do you need? Well, I like to be at the first of the month on the monthly M3 with the double top of a double top with a lower low, with a lower high. And, yeah. Okay, good. All right, so let's look for evidence to see if it's yen strength across the world. Yen strength, yen strength, yen strength, yen strength, yen strength. There you go. So that would mean exotics are up. Exotic currencies are down. US dollar is up. Swiss franc is up. Right off the bat. There's enough evidence here to have a pretty good understanding of what's going on. So let's check the world. Let's check the world. Okay? No, not fundamental for pound. That's what I'm looking at. The relative strength indicates this has nothing to do with the pound. Yes, you got it, Mikey. All right, so ASEAN 4 hour. I wouldn't call this a reversal yet, but certainly the last 8 hours, we got some red candles. Okay, so you can judge that the way you want to judge it. US dollar stronger than the euro, which I just said. Even though I was looking at yen, I could see that. WTI is much more down than up, which is also part of what we just talked about. Bitcoin is coming down. Okay, that's also a risk-off play, which I drew for you a week ago. Hey, you're welcome. Okay, so that means down to the 55, up to 11,000, and down to 10 or 9. Okay, so that looks like risk-off, risk-off, risk-off. Cool. And then gold is gold. Gold is sort of decoupled more recently. But anyways, it's fine. So here we go. Yep. And this is the whole patience and discipline thing, because I know people in a live trading group that wanted to sell this and they had to wait. 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 And they wait. And now, game on. Game on, fellas. Okay? Everyone gets their turn. Now, still a key turning point. Still a key turning point. Even though it's down now instead of up, look at, on the ups, it was key turning points. Okay? Cool. So, write this down in your notes. You need to add the clock to your analysis. Okay? Timing is everything, Bubba. Okay? Cool. So there you go. Lots to digest and absorb. Let's take a look at WTI. Can it recover from this? Now, do you remember drawing these red lines? Do you remember drawing this and then drawing it back down? It's kind of cool, right? There's a chance if bulls are going to come in, they're going to want to buy here and take it up. And it has to do with the price action. So let me do the PA this way. Okay, there's a bullish assumption, and there's the bullish confirmation. Now, of course, nothing's confirmed. I mean, a higher high would confirm it. But that's what their strategy would have been, or is. That's what whoever's buying it right now, that's what they're doing. And they're going to take it north, and they're going to make the higher high. So what they're doing is they're connecting, let's do a different color here. They're connecting, oops, what the heck was that? All right, let's go back. Okay, they're connecting this, and then they're going to make that parallel to like, okay, so I guess it's more like that. Anyways, that's what they're thinking. It's not so specific. Let's do it this way, okay? That's what they're planning. So now you know what they're doing. We don't know if they're going to be successful, but we know that's what they're planning. And if they get that, of course, then WTI goes up, US dollar's likely to weaken, Canadian dollar's likely to strengthen, and that would be a risk-on mode. We don't have that now, so what? So what? What do you mean now? Now's already done. What's happening now you planned yesterday. So you're like, well, that doesn't help me now. No, it does not. What are you going to do tomorrow? What's the game tomorrow? Let me ask you something simple. Are we going to stay above 40 or not? You think the psychological level has anything to do with this? Of course. FT9 says roll reversal too. Yeah, it's all there. The thing is, are you a bull? If you're a bull, there's no way you would miss that. A higher high, higher low, roll reversal at the psychological level of 40. You missed that and you're a bull? I don't believe it. I don't think you could. If you're a bull and you're trading this, there's no way that's possible you would miss that. Okay? So therefore, if there are bulls in the market, that will go up. You will make money. If there are no bulls in the market, then yeah, of course, it's going to fail. Oops. And you're going to lose a little bit, but not much. I mean, we've been stuck here for a week, dude. So you're either a bull or you're not a bull. What's the saying? Pip or get off the pot? It's kind of like that. There used to be so the question here is WTI and nat gas. There used to be an inverse relationship between the two, but I don't see that. I haven't seen that in several years. And so, yeah, I wouldn't worry about it. I would trade them as different asset classes. If you're going to trade the energy complex and you want to throw that in there. But I don't know if you seriously want to trade it or not. Does anyone here trade nat gas as your primary means of making money? Okay. So let's see. So oil's nat gas has been going up for a while. Okay, cool. Recovering from the zero, right? So I don't know if you trade nat gas or not, but here's the lovely thing. Everything I teach you is valid on nat gas. Check it out. Let's just look backwards to recent history. The projected low for the month, the projected high for the month. Oh, nice. Check this out. M2 for the up. Now, of course, normally we're getting out here. Holy snicker schnucker. Look at that. Well, I can't predict that. Nothing on the chart predicts that. But that's what happened. And the interesting thing is your stretch goal here is really R3. And you blew out the doors out to R3, probably R4, but now we're retesting R3. At some point, you got to put the money in, right? Right? You got to take the money and run. So I don't know what you want to do, son. Pipper, get off the pot. Okay. So anyways, that's that. If you're interested in natty, if you're a nat daddy. Okay. Looks like a pretty key break, though, huh? Ma-na-na-na-na. Okay. What's up, Bobby? What's up, Bodoo? Bodoo in the house. Wayne, how are you today? I'm fine, thank you. Why do you call Corona issues fake sentiment? I've never said that in my entire life. What is the real sentiment? I've never called that fake sentiment. So, okay. See, I'm a realist, or at least I try to be. So there only is. I mean, lies are reality, but I'm not saying that's a lie either. I look at everything from an economist's point of view. Okay? So I only look at it as economically. I don't watch news. I don't read tweets. Honestly, I've unplugged many years ago. I gave up on. I mean, let's say I just found very poor data from the media. In fact, sometimes I found it to be completely wrong. Not that it's fake, I just think they do a crappy job and they have no idea what they're reporting about. So I'm like, you know what? I know more than these guys, so I stopped reading. Honestly. So I get my news from economic data points. Okay? So if I need to know what retail sales is, I get the retail sales numbers. If I need to know what GDP is, I look at the GDP numbers. If I need to know about payrolls, I look at the establishment survey and the household survey. And if I need inflation, I look at CPI and PCE. Cool. I mean, I just gather that myself. I actually get my news from the government agencies that report their statistics, or other institutions like the IMF, or the World Bank, or the Bureau of International Settlements, so on and so forth. I love getting information from like OPEC. I like getting my information by the EIA and the IEA. Even the real estate industry has some phenomenal data. But that's it. Oh, right on. Bodoo says, hey, bought the courses. Great content. Awesome. So anyways, that's so I don't say Corona is fake. No, it's real. People get it. How bad it is, I don't know. I'm not a doctor. I'm self-isolated, right? Well, I haven't left my house in months. Well, I never did anyways. Like my personal life, now my kids' lives changed and stuff, but like I never left the house anyways. Ever. Like I did school, I did work, and that was that, and raised kids. If I left the house, I was driving the kids to like soccer tournaments or something, right? Like, and that was rare. So that's it. So I've been self-isolated and unplugged from the world for probably close to 10 years. I just get the facts, and then it's just me against the world, and you're coming along for the ride. That's cool. Right on. Okay, cool. Need to move on.com. Let's do a little gold here. Okay, we got some ups, man. We got lots of ups. Let's take a look. Let's do. So we did fractal yesterday. I guess we can kind of start breaking it down. The buy. So like, let's go into this. The buy for this week, we planned last week. I hope you're getting this, right? You're getting this concept now. Last week, we said we want to be long somewhere between 1940 and 1950. $10 range, very specific. Okay? And we happen to actually be there on Monday, and then on Tuesday, and then on Wednesday, and then on Thursday, and then on Friday we took off, and then Monday we're still climbing above. So this is actually like a Thursday front run. Okay? You see? This is why I keep saying, like, today is irrelevant. What do you mean today? What am I going to do today, Wayne? Is gold going to go up? Like, well, I don't know. What do you think? I don't know. What do you think? Are you selling the higher highs? Like, I don't know. Like, it's so factual. I don't have an opinion. I mean, what opinion? It's going up. Right? Until it stops going up, and then it's no longer going up. Okay? Now, can you be a bear here? Yes. I don't think you're selling, though, but you might be ready, willing, and able. So I forget, was it pound yen, I guess I pointed out, where I said, you need a double top of a double top before you kind of get bearish. And so the way that would look is like this, and then pretty soon that, right? And that's when you're kind of getting game on. You can sell up here as a double top, or the lower low, lower high, either way, right? That's what your strategy is. That's what your planning is. You'd be planning that now. So if Monday, right, Monday, I know today's Tuesday, but if Monday in the future is down at this price, you'd be selling, but you plan that now. You already know that. You might even look at that Friday after non-farm payrolls and you're like, yeah, I'm going to take this. This is my Friday front run. Done. You're planning. But you're not planning today. Today is done. Okay? Michael says it's a plateau. Well, that's why you wait for breakouts, right? So, like in my book, we talk about this. This is actually like an old man easing into a hot bath. What you're looking for is a lower low, lower high, breakout, pullback, and then you trade the reversal. So if it plateaus, it doesn't bother you because you still haven't traded it. Okay? So just to take a look at it from a bearish point of view, what are the bears thinking? Okay? And the bears are thinking it has to fall right here, right now, or it ain't going to fall. So if bulls are watching it ride the 21 and it just tickles back above and we kind of retest this 1985 level, then bears have wimped out. And it's going to go to the next level. Okay? Just like it did here. Bears wimped out. Okay? So put it back to the bullish point of view. If you know we get to like 1985, then where are we going, eh? 2000. In fact, I can be a little more specific. 2018 to 2033. I would only guess 2018. Nice, huh? The impact of the economy. Going back to the COVID question, it's really simple. If states shut down, the dollar gets strong. That's it. Done. That's it. I have clarity. Doesn't mean I'm right, but if I'm wrong, I clearly see it because I clearly am opinionated. Okay? Cool. And so we're just farting here. Farting around here. Double top of a double top, though, huh? If bears win this battle, it's a long way down to Tipperary. Okay? I said a boom, chicka boom. Okay? It could be way down. Way down. I don't want this, by the way. But, oh my God. Oh. Flourish. Flourish. I've explained it so many times. There's 5,000 videos on YouTube that I've done. You got to start going through them or take the training course so you know. But like, if you don't understand why the dollar and the Swiss franc and the yen would get strong in that situation, your gap, and I'll explain it this way, your gap is knowledge of fundamentals, specifically toward a reserve currency and specifically to global money flow. So Right. So that, which is fine. You don't have to learn that today. The first thing you need to do is master technical analysis, which is cool. And that's primarily what we cover here. But then technical analysis just tells you how it's behaving. It doesn't tell you why it's behaving the way it's behaving. And so that's what you'll need to learn next. Okay. Whether you learn it from me or from somebody else. Hi, I'm the world's greatest real money trader. What's like I'm the world's greatest real money options trader. Look at me, I'm in a jet. Yeah, maybe that guy will teach you how money flows, right? I'm in a jet. I'm the world's greatest real money options trader, and I'm in a jet. You're like, oh, yeah, that's cool. Who does that work on? Like an 11-year-old? Right? So anyway, so Flourish Lucky. I'm not giving you the full answer just because it's been said, but I'm giving you the gap. Now you've identified your gap. Okay? So again, it's fundamentals, global money flow, and specifically toward a reserve currency. But let me also say that's like elementary, the question. So that's not to like knock you down. It's to build you up. Like this is what you need to be learning. Okay? This is what you need to be learning. Oh, and by the way, my professors at Harvard don't get it either. So don't worry. I'll teach you and you'll be smarter than them. Okay? All right. Cool. So if this happens, I'll be El Depresso. El Depresso. And maybe it does happen as we crawl toward the election. I'm not going to like that because this also means most likely flare-ups in, going back to the coronavirus thing, flare-ups in corona, COVID-19 around the world. Let's call it COVID-20. It's COVID-19 because it came out in 2019. So how about COVID 2021? If that hits and we once again have to shut economies down around the world, then I will be selling this hot and fast. I don't want to now, and that's actually pretty bad, but there you go. Why are my screens off today? Because I am focusing on my final exams tomorrow and on tomorrow's Wednesday. So the next one is on Thursday. So right now I'm doing some trading. The rest is studying. Later tonight, I'm trying to help my friend raise $1.5 million from some rich people. So today's just busy. I'm not going to get to those. Not going to get to that. So, but thank you for asking. Cool. Oh yeah, Peter. No, the question was, I said, oh well, if such and such happens, I'll just be buying the dollar. And someone's like, well, whoa, what do you mean buying the dollar? Okay, so instead of just throwing out an answer, I said, here's the path to get to the answer, and more importantly, not the answer but the knowledge. Okay. Like, you got to know this stuff, right? So when I first started, there was nothing, right? I don't need people to tell me what to do, but I needed in the beginning to have had someone that pushed me in the right direction. Because if I just know like where I should be going, and if someone could just validate that what I'm doing is somewhat correct, I can just keep going. Where I could have lost hope is never really knowing if I'm on the right path. And that was the real risk that I faced in the early days. I didn't know what I was doing, and there was nobody. There was no books, no mentors, no nothing. Okay? I didn't even have charts when I started, right? So I never quite knew if I was on the right path, and I didn't, right? Like, am I doing the right things? Am I studying the right things? Are the things that I know actually true? And where should I be in 2 or 3 years? Like, I don't know. So that's why I feel if I tell someone, like, what was it, Flourish Lucky? I'm like, I'm assuming, because I can see the picture. all I can see is a beautiful suit on, right? So I can see that Flourish Lucky is probably the type of person that just needs to know where to go next, doesn't, right? So I'm like, okay, good. Now you know there's a massive gap in the fundamentals, and don't confuse news with fundamentals, okay? We're talking about central banking. We're talking about global money flow. We're talking about reserve currencies. These are the things you need to throw yourself towards to master that part of trading. And that will help explain why markets move the way they do, so that I could just say, well, if this happens, I'm going to do that. Like, why? Oh, well, that's how it works. Right? Let's take the phone apart and look at what's inside. These, right? This is the antenna. This is the battery. This is the chip. This is, we're breaking it. How does your voice travel through the skies toward the stars, across land and time and space to talk to somebody else? Yeah, cool. Well, let's talk engineering, right? That's how does your cell phone work, right? There's some people like, how does the cell phone work? Oh, you turn it on, you put in your password, you dial some numbers, and it rings on the other side. Well, that's not what I'm talking about. Right? What I'm talking about is how does your phone work? There's a haptic screen. Oh my God. You know how amazing the screen is on your phone? Right? But how does it work? How does it work? So that's what I'm talking about. How does the market work? That's what I want you to learn. I can teach you, or you can do it on yourself. Or you can hire the greatest real money trader who flies in a jet. Maybe he'll teach you. How do you know he's successful? He's in a jet. That's how he's successful. He flies in jets. My God. Okay. So anyways, this might happen, but I really don't want that to happen. Okay. But I have to see what is, not what I want. Cool. Okay. Just a quick scan, and then maybe I'm out. Let's see. Let's do this. Michael says, Wayne, why won't the new stimulus package keep the USD weak? Who said it wouldn't? Okay, pig is down. Aussie's up. Interesting. Kiwi's down. Okay, here's the big thing. Swissy up, dollar up, yen up. And I said that at the very beginning of the webinar. I looked at 3 or 4 yen pairs. I noticed this, and I noticed this. So therefore, I just immediately said, okay, Swissy strong, dollar strong, yen is strong. Just like that. Okay? And that is global money flow. Okay? Hey, so FD9 says USD Mexican peso. Well, I drew a line in the sand yesterday on USD Mexican peso. We have gone through that line, so it is dead. That's how I explained it yesterday. I drew the line. I told you why it was important. And if it went through that, it's dead to me. Because I can only sell, I can't buy. In my rules of engagement. And I explained that why for that as well. So you should know we blew through that line, FD9, so I'm done. Okay, Niraj? Done. I'm done. Not interested. I don't want to look at it. Watch yesterday's video, look at the line, you'll see we're through it, and it's dead. It doesn't exist to me. I can't even bring it up on my charts. It's gone. It's an illusion. It's gone. Okay? So anyways, Aussie relative strength-wise is the odd one out. Euro down makes sense. Kiwi down makes sense. Pound down makes sense. This is down. Now, 2 out of the 3 commodities on here are up, which is actually kind of interesting. So this reflects maybe the buyers of oil on that central pivot. Remember that? You are screwed on USD Mex, but I think Well, how could you be screwed on anything, FT9? But you think you did your job selling at monthly. I didn't see a reversal pattern there, FT9. So I don't. I first of all, I don't like the language. Not that you're like it's insulting. Like, what do you mean screwed? Like, that's impossible. There's no way you're over leveraged. There's no way you just bet. Okay. But you're like still on the trade, but you don't care. No, you didn't. What? Whoa. Okay. Now I'm going to bring it up. Oh my God. I don't know what the heck you're talking about. So let's go and look at that. Here comes Niraj. Okay. All right. Where did you get in? So maybe in here, I'm going to give you the benefit of the doubt. Maybe in there, okay, you got your entry. What was your entry? The lower low, lower high? So you sold that, I suppose, into an hourly 21. I mean, that's very, very, very aggressive. So why were you so aggressive? First of all, this trade is supposed to occur around the last of the month, beginning of the month. So which was actually, yeah, so it's late. It's supposed to happen last Friday. So you sold into the hourly 21. So here's the other thing, like you're saying you did your job. Your job isn't to sell at M3. Let's do it this way. If your job is to sell at M3, I could fire you, not pay you any money, and just pay $12 to have someone program an EA that sells at M3. So you sold at resistance, but while it was going up. So I wouldn't say that that's your job. So let me go back to like a theme I've been talking about the last few days, and maybe, I mean, obviously it fits in well here. To reverse something, okay, you're most likely going to get a double top of a double top, or some form of that, because you're riding the 21, which by definition is bullish and aggressive. Okay. Ford trade is illegal. How the hell would I know? It sounds stupid, but anyways, I don't know anything about them. So anyways, this is why we have the double top of the double top. This is why I've been talking about it recently, because you need the moving averages, for example. If you're going to use them, use them. If you got them on your chart, put them on your chart and use them. You need the 21 to cross below the 55, because the way that works is you need the big low, lower high, and now you get this lower low, which is which is somewhat of the double top of the double top, which then sets up the roll reversal this way. Okay? So your job, to say it differently, your job isn't to just throw down a trade because it's M3. That's dumb. I didn't say you were dumb. Let me say this differently. Throwing down a trade there is a bet. Let's say it that way. You are betting. This is your logic here. You're doing your job, and you're like, I bet you it falls here. And you're saying, I'm a bear, so I bet you it falls. No, that's not your job. That's not how you do it. That's not how you trade. Your trade is to use first of all, if you want this to fall, there's a fundamental reason why. Maybe the one I explained yesterday or the day before. Fine. So now your job, as you said it, you did your job? No, you didn't. Your job now is to use technical analysis to confirm or deny a reversal. I don't see no reversal. Yeah, you sold in the face of an hourly 21. Okay? Bullish and aggressive. 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 It will go forever and ever and ever until you see it reverse. Okay? Okay? So right now, on this time frame, USD Mexican peso, by definition, is technically bullish, according to my book. Okay? So you could wait until it becomes technically bearish, or you front run it because it's already in the process. And that's what we call about an old man easing into a hot bath. Okay, so right now, what you'll need to see okay. Okay. But don't ever say you did your job because you sold at M3. That's not your job. Okay? That's not your job. And the sad thing is, like, you could have gotten lucky on that. That's fine. But your job is to be more than that. Better than that. Okay? So you sold at the right price, but you got the wrong time. Okay? You want to sell reversals at resistance and ideally in a downtrend. Okay? Okay? Do not bet. You got to remind yourself, do not bet. Do not bet. Do not think like, I have to sell it because it's an M3. That is wrong, 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 wrong. Now, to expect a reversal there is correct. But your job is to trade the reversal, not the price. Okay, cool. So South Africa got crushed on this. This is all related to commodities. Now, the interesting thing is CAD and Aussie are doing well. So this is more of a flow issue. So what I'm hoping is next year, I will be plowing money back into those emerging markets. That's what I'm hoping for. That we get through this year, and this year is special because of the election. And next year, I'm hoping to set things up. No, it's not up to me. Right now, it's my idea. Okay? But it would be nice if we got through COVID. There was some sort of at least psychological cure to COVID-19. Okay? There's a vaccine. There's a vaccine. Great, 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 great. If there's a vaccine, I'll probably be plowing money into emerging markets. Okay. What is global money? I don't know. Again, it sounds silly to me. I don't know. I have no idea. I have a membership at the Harvard Club. I know what that is. Okay. Well, here's the other thing. I want to go back to FT9 here. Okay. Niraj, there's also a scenario where it needs to be impossible that you, I forget the language you used, but it sounded like you got crushed on that trade. That's also a problem. Okay. That's also a problem. If you're in a situation where you lost a lot of money, you're not trading properly. Okay. On says, hey, the vaccine needs to work first. I disagree. Again, from an economist point of view, people just need to think that it works. In fact, I don't even care if people think it works. I just need the economy to stay open. That's all I care about. So, does it need to work? I don't care. I just need people to go out and spend money. Okay? And if Americans feel good and they go back to work and everything's great, they're going to buy LG TVs and Samsung TVs, and the South Korean won will go up and the US dollar will go down. That's it. That's all I do. I follow the money. Good, bad, right, wrong, moral, immoral, none of that exists. It's only money. And someone quoted me the other day like, oh my God, Wayne, well, if it's only money, why don't you give me all your money and then we'll see how you feel? Like, holy crap. Settle down, son. What I mean is money is, it's a tool. Okay? It's this medium of exchange, if you will. And we're money traders. So it's our unit of account. Right? And I watch money go from one country to another country. One out of greed and then one out of fear. And one out of happiness and one out of sadness. And in this, it moves around. But ultimately, it's a unit of account, a medium of exchange, and a store of value. It's somewhat of an illusion. Like the speech that Gordon Gekko gives, he's like, look at this painting on the wall. I paid $2 million for it 10 years ago. And it's a piece of canvas with paint swirled on it. It's worthless. But I bought it for $2 million, and I can sell it right now for $4 million. But it's still just a painting, a canvas with swirls on it. Your house went up in value over the last 5 years. Why? It's the same house. Okay? So anyways, that's where you need to look at it is it's just the grease for the machine that you work on. Okay? Hyan says, the reason I asked about Forex is I think I'm being scammed and I need to get out. I don't know. How about your lawyer? Okay. Punit says, hey, NFPs on Friday, how do we plan that from now? Well, first of all, you can look at the economic data, and I've already compiled a whole report on non-farm payrolls and how to create a model. Has everyone read that? I wrote this big old thing at FX Street. Big old thing, how to create a model for non-farm payrolls and all that kind of stuff. So you could create your model and you can tell me whether you expect a radically horrible number or a radically surprisingly good number. But most likely it'll just come up. And most likely it won't matter. And most likely it won't change anything at the Fed. And most likely, it will create some short-term volatility. It might change relative strength for a couple of hours. And then by Monday or Tuesday, we just go back to doing what we were doing. Okay. Is that report linked to the video you created on FX Street? There's many videos that I've done for FX Street. So is it linked? It's called how to plan the employment situation report, how to trade the employment situation report, and I don't know. And I give some tips and tricks and bonuses, and I don't know. But you guys should know all this. You should. The knowledge is out there. This is what I'm trying to tell you guys. The knowledge is out there. It's been shared again and again and again and again and again. You got to be an animal and just be relentless getting this knowledge. Okay? Is there a video on it? I don't know. But you say the NFP video. I don't know what you're talking about. Right? I've done 14 or 15 years worth of videos at FX Street. Like, which one are you talking about? 15 years. 15 years. Right? There's a lot of videos, bro. That's all I'm saying. But there is one, it's written. I wrote this out because people are like, how do you predict the numbers? So I'm like, okay, well, you just have a model. Dude, you just have an economic model. It's not complicated, right? So I go through. You look at this, 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 and you look at all that, and then you kind of make an educated guess. Okay? And then here's different ways to trade it. Okay? And a lot of this information's in the book too, so it goes out there, right? But here's what will shock you. When it says, experts expect non-farm payrolls to be X number, what you'll find out is what they do, what you actually look at, what they do is so basic. Like literally, let's say a 10-year-old could do that same kind of math. And then you realize nobody knows what they're talking about. This is like the saddest thing that I've had to learn over the years, where I started knowing nothing. Okay? I started knowing nothing. I knew nothing about fundamental analysis. I knew nothing about technical analysis. I didn't trade something else. I didn't roll in from stock trading or flipping real estate or doing options. I started with Forex and I knew nothing when I started. Now time goes by and I listen to people on the radio, or if I happen to have the TV on, which I don't ever, but if I'm listening to CNBC or something like that, I'm saddened by it because I looked up to those people. If I only knew what they knew, I would be, so successful and so happy or whatever. I looked up to these experts and I said, one day I want to be an expert. And now I look around and go, oh my God, this expert has no idea what they're talking about. They think they know. They're not trying to deceive you, but they believe their own crap because they've told their clients over and over and over, years and years and years, blah, 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 blah. And now I go, oh, shit. And I realized many years ago that I'm on my own when it comes to like my own research, my own alpha or whatever. I'm on my own. There isn't anybody, right? So that's that. Right? Right? How much money have you lost in Forex trade? I wouldn't have quit my job if I was losing money. So most people go into Forex because they want to quit their job or something, right? I had an amazing job. Awesome job. Forex was a thorn in my side because it forced me to make a decision doing the job I thought I'd be doing for the rest of my life or choosing Forex. So I made it very clear I had to be more successful at Forex than I was in my job. Because my job, you'd get a paycheck, you got bonuses, you got time off, all that kind of stuff. And it was my first real job of my life, except for NASA or something, right? So all of a sudden I was in this situation as an entrepreneur. My entrepreneurial spirit was being fed. And I got this guaranteed check and bonuses and stuff. I'm like, look at me, I'm a venture capitalist, right? But then I got this Forex thing and I said, well, if I'm going to quit being a VC, I have to be making significantly more money as a currency trader before I quit my job. And that's how it happened. So I wouldn't lose a bunch of money and quit my job, nor would I quit my job and then I'm going to go for it. I'm going to be a currency trader. There's no way I'd give up my job for that. Oh my God, quit and go see if I can do it. No way. No, 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 no. No, there's no way. I'm quitting my dream job and gamble that for something different. Like, no, I was already happy. So that's why I'm like, right, there you go. So Mo says, I've lost a significant amount of money since last year. You need to stop, bro. That's how you stop the bleeding. No, is losing money normal? No, it sucks. Mo, it sucks. It absolutely sucks. Okay? It absolutely sucks. You need to stop that now. What do you mean lose money? You would be better to practice making money than actually losing money. Okay? So you need to stop like right now. Fire your old self as a trader. You're fired. You're effing fired, Mo. Fired. Right? This is where I mentor you as a junior trader on my trading floor. And I say, oh, come here, Mo. It's okay. And I put my arm around you. And I'm like, hey, let's walk out the window. Let's walk toward the windows and have a nice sort of mentor to mentoree conversation. Like, no, it's, everyone that goes through a tough period. And boom! And I push you out the window. You're fired. Okay? No, you are not allowed to lose money. Is it normal? Not for a winner. And Mo, you're obviously putting, you want more, okay? You want more, you want better. So you need to radically change your behavior. Over leveraging and all that doesn't matter. You can be under leveraged and burn money. It doesn't matter. If you were a startup and you were burning more money than you were making, and then you come back, you're like, yeah, I didn't hit any of my milestones, can I have more money? I'm like, no, you're fired. No, you're fired. It's shameful, Mo. Your job is to protect your money. You love money. You care for your money. Okay? You love your money. You protect your money. You care for your money. Your job is to buy and sell money. Money is your product. Money is your service. Okay? So stop. Full stop. Today, stop trading. Now, you need to focus on learning how to trade, because losing money like that, especially month after month after month, what the hell? It's insane. It's insane. Is it normal? It's insane. So stop and let's get you figured out. Okay? At the very least, spend the next year just watching these webinars with me. Okay? Maybe you take some courses. Maybe you get some one-on-one training or one-on-some training. But you need to full stop losing money. It's absolutely abnormal. It's completely unacceptable in every stretch of the imagination. Okay? Stop. Now. One way of looking at it is if you've lost half your money, so you went from 25,000 to 12,500, okay, now you have to double your money to get back to break even. The math gets worse and worse and worse as you go. Worse and worse and worse. It becomes impossible to the point where maybe it took you a year to lose 12,000, you'll lose the next 12,000 in like 3 weeks. Because it's proven that the human psyche will gamble more when you're down because you need to make it back. And you will not succeed, okay? Because you don't have it. You just don't have that shot in the bag. You're not going to be able to outdrive Tiger Woods. I'm sorry. You're just not going to beat him. You want to, but you can't. So you need to really, 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 really stop. And let's start giving you small small skills that you can build on. Okay? Small skills that you can build on. And imagine 1 year from now, if you put in massive focus in learning how to trade, in 1 year from now, you'll be significantly better as a trader. Then maybe you can start the process of slowly rebuilding your account. Okay? Okay? By the way, there are dozens of people in this community that will be here with you as you go. You have lots of support from this community. Okay? You are not alone. Okay? Bradley says, hey, what's the monthly goal? 5%. No, Michael says fxstreet.com only has 7 articles. Yeah, that'd be just the articles. I didn't write a lot of articles, but I did a lot. So did they scrub it? No, just it would be the one that says either how to trade NFP or the employment situation report or something. It's there. Okay. Okay. So Bradley, if you're doing, let's say, 5 or 6%, okay, 5 or 6%, that's roughly 100% a year. So if I don't achieve that, if I'm only doing 3 or 4%, right, in a month, you're like, well, I'm fine. It's enough. Okay. Like, it's fine, it's enough. I only have to be better than the next best thing. Bradley, leverage doesn't matter. It's how you use the power of your wand that matters. So lot size. But 100 to lot, is it acceptable? Sure, but you don't need it. Okay. So for example, think of it this way. I've had well over 100 trades open and had 100% available margin, which means essentially there was no leverage. None. And you're like, well, how the hell could that possibly be true? Well, over the course of maybe 300 or 400 trades, right? 100 or so were still open. Many others lost money. Many others got knocked out at break even. But I'm not in those trades. I'm not in those trades anymore. So half of them broke even. 1/3 of them, right? Right? Or no, let's put it this way. Maybe half of them broke even, 25% of them lost, and I still have 25% open. But the thing is, they're all profitable, so I'm not using any leverage. But each individual trade used very, very little leverage because the way I look at it, it's not the leverage per se, it's the lot size relative to your account size. Okay? And, you know, when you run a fund, when you're trading other people's money, you could really do it if you're conservative. You could really do it with no leverage. Okay? Or very, very little leverage. You could be leveraged 10 to 1 and do very, very well. If you know how to trade. Okay? And knowing how to trade means if you're wrong, you're wrong. You get out. There's no like, oh my God, USD Mexican peso just spiked. It crushed me. What do you mean? What do you mean that's impossible? So when you're wrong, you're wrong. It's not a big deal. Because your lot size is so minuscule, it doesn't matter. You're like, oh really? That didn't work out? The next thing is you let it run. But then you get another one, and another one, and another one, and another one, and another one. So if you are sitting at your charts 8 hours a day, okay, you're probably able to get 10 trades a day? But they're all tiny little trades. But they're all based on the same logic. So you get this one in, let it go, and then move the stop. And then you get another one, let that one go, move the stop. Get that one, and then move the stop. And over at the end of the day, you're like, how many trades do I still have open? Oh, well, 4. What happened to the other ones? Oh, I lost a couple break even. And I got 2 or 3 open. Okay, good. And then the next day, do it again. Next day, do it again. Next day. 5 weeks goes by, you got 60 trades still open. Why? Because you're the world's greatest trader? No, you are a buyer and the market is going up. Wow, that's brilliant. Oh my God, you were buying dips in an uptrend. Yeah, you know what? They're not going to give you a Nobel Prize for that. Okay? I'm sorry, you don't have to be a rocket surgeon to understand that. So, that's when it works out really well. And then all of a sudden the market stops doing that and you will not get very many opportunities. And that's usually when you get knocked out. Now, I figured out the hard way because it always seemed to happen around the same time. I have this is how I learned seasonality. I get knocked out of 100 trades and it feels horrible. I'm like, oh my God, they're like my, they're not like my children, but it feels like a loss of family or a loss of something. Like you've been nursing these trades for months and all of a sudden they're all gone. And you're like, oh man, this feels bad. Well, after 2 or 3 or 4 years of doing this, you're like, son of a bitch, this seems to happen every November. And then you're like, well, not quite every November. Sometimes it's late November, sometimes it's mid-December, sometimes it's late December. But then you start working it out, you're like, oh, there's some fluidity here. And then you're like, well, when do I start building these portfolios back? And they're like, oh, I tend to kind of do them around the same time over and over and over again. And then you're like, oh my God, there's a pattern. Okay? Thank you, guys, by the way. I see the super chats, I guess they're called. Okay? I don't know what you're posting, dude. But yeah, blockchain is the future. Yeah. I don't know what you're talking about, though. Cool. So, anyways, is losing money normal? No, not for a currency trader. Okay? For a gambler, yes. The math shows as a gambler you will lose money. 2, what? Yeah, I don't think there is any other lesson. Short nat gas now. Ali G. Okay, let's take a look. Let's do it. All right, where do I got it? I used to, where's my, I don't have my energy complex anymore. All right, la. We still have nat gas. All right, so let me answer this question. Nat gas, short nat gas now. Okay, let's take a look. If you're going to short, ideally you're in a downtrend. Okay. Ali G, do you consider that a downtrend? I see what you're saying now about, I see there's someone in here named Ripple. That makes more sense now. Okay. So Ali G, is this an uptrend or a downtrend? Big no. Well, Ali G's not here or what? Ali G put 10 euros in my G string and he's not here? Is this for later? And there we go. No, I'm asking you a simple question. Is this an uptrend or a downtrend? See, I like to short at resistance in a downtrend. Okay? So for the sake of time, I'm going to say no, this is not a downtrend. Is this resistance is the next question. Well, let's take a look. Go out here and go out there. Okay, I see your logic, and that's why I've already marked this. So could you sell this? And if you are trading the range, then you'd have to use range trading strategies. Okay, so let's do it this way. It's not a downtrend at the moment on the shorter time frames. On the longer time frames, this might be a role reversal. So the next thing is, could you look to be bearish here? Yeah, you could. I see the logic. But now you got to treat it like a range. So what tools do we use as range traders? Anyone want to answer? Oscillators, indeed. Now I can see someone already brought that up. Something about, I guess, is Bradley RSI. You know, but the thing is, a lot of people use these tools like RSI and stochastics and all MACD, but they don't understand the math, so they have really no idea what they're talking about. Where they're like, well, because of this, it's overbought. Well, of course it's overbought, but that's not how you use it. But anyways. So we'll stay here. Could you, if you wanted to, be a bear? Yes, but not in this situation. Let's go to a smaller time frame, like maybe hourly, because I'm assuming Ali G is aggressive or more aggressive. So let's add an oscillator and get rid of all these trend tools. All these trend tools are irrelevant. So let's go to this scenario. Okay, now we've added oscillators. And we know, for example, let's just call this our resistance zone. Let's call this the closest support zone. So we're going to kind of play in here. I'm only looking at it from a range point of view. And in this point, because I've been asked, is this a good place to sell? Well, so I'm only going to look at it from that selling point of view. So this is, you could do this on the hourly or you could do it on the 4 hour. It's your call. Let's do 4 hour. Okay, what do the oscillators tell you? These oscillators right now, the first one I want to look at is RSI. The reason I want to look at RSI first is, stochastics. They're very similar. I want to look at stochastics first because it represents overbought and oversold conditions for price, not market. MACD does market. But the market's sideways, so the market is dead. There is no market. So that's the first thing I would do, is I would just kill that. Done. Now, all we're looking at is price and price action. Okay? That's all we care about in the moment, is price and price action. And so we look at oscillators. First thing, as someone said, and I think it was Bradley, it's overbought. Okay? Does that mean sell? No. No, it does not. Because by that logic, that means sell, and that means sell. But you didn't do very well. One of them you did mediocre, and the other one you lost. That's not what these tools tell you. Now, I'm convinced there's tons of gurus that tell you that, but of course they have no idea what they're talking about. Cool. So we can talk about the math now. You guys ready for a math lesson? You guys want the math? Give me the math, not the opinion. Give me the math. Give me the math. Give me the math. So let's do it this way. Let's kind of see how much I can zoom in. All right. So, okay, so here we go. What we want to look at is, or the question. Okay, the question is, can you sell up here? Yes, you could if you wanted to. It is resistance, and you couldn't consider this a range. Cool, so if that's your alpha, great. So then when would be the good opportunity? Well, we use this algorithm. That's all this stochastics is another algorithm. And we want to say when we are at resistance, and we already know where resistance is, so you ignore it until you're at resistance. When we are at resistance, we want to know when it has stopped going up. Because you don't want to sell while it's going up. You want to sell when it's coming down. Okay? Cool. So, what is the definition of not up? Well, not up is failing to make a higher high. Oops, that's too much. Failing to make a higher high is one. And then the creation of a lower low. See, the first part is no longer making higher highs, and then lower lows. Okay, that's what we're looking for, but we don't want to measure it ourselves. We want the stochastic oscillator to tell us when it's happened. So it's measuring over the whatever settings. Mine are 853, so it's very sensitive. And it's saying over the recent candles, we want the oscillator to watch price's ability to make higher highs and then alert us when, then alert us when they've begun to make lower lows. Okay, that's what it is. And when it's done that, you probably have a better chance of selling at resistance because it's already someone else has already done that. The other way of looking at it is if stochastics or RSI or whatever you're using is going up, it's because people are buying. Okay? And it shows you how many buyers are in it while it's going up. And of course, when it's overbought, what that's telling you is everybody's buying it. It doesn't tell you sell. It does not tell you sell. You do not sell overbought markets. It's overbought because everybody is buying it except you. And you're like, look, everyone's a buyer. I think I'll sell. It's wrong. So that's not what we're looking for. We want to be, first of all, I prefer it being a downtrend. Also, if you're not at resistance, none of anything that I'm talking about right now matters. Okay? So your last guru said things like, oh, I'll make Forex easy for you. Use the stochastics or use the RSI. And you sell here and you buy there and you sell here and you buy there and you sell here and you buy there. It's wrong. That doesn't work that way. That's wrong. Because you'll sell in the middle of the market. You'll buy in the middle of the market. That's wrong. So you have to ignore everything that's not at support and resistance because everything about being a trader has to do with support and resistance. So that's why I started here. So Ali G says, hey, is this a good place to sell? Well, I don't know. Is this resistance? Is this a downtrend? I don't know. I have to figure this out. Okay? So I'm like, okay, you could be a bear on that gas. I see it. Okay? I can see why that might be your alpha. It may or may not be my alpha. It doesn't matter. Okay? But if you paid me to trade this short, I could do it. Okay? So again, I need resistance, because without the resistance, I don't know which oscillation to trade. I know down, but down when? Down in the middle? No. Okay? So anyways, going back to this, I want the oscillator to tell me not just it's overbought, but more importantly, after it's hit resistance, when have the bulls taken profit? And I will see that, because I don't know if it's actually bearish. I just know we're at resistance. There's a difference. So the first part of a successful bearish trade will be bullish profit taking. Okay? So I want to see the lower lows before I sell. Okay? And then, of course, the first target is at the bottom of the range. Now, very often you got like a mid-range as well, but that's more risk management at that point, not an entry. So what the Stokes will tell us is exactly that. I want to see, now that we've touched the resistance, that this oscillation not only is up there, elevated, okay, but it crosses down and back into the trade zone. Okay, so I'm looking at this as sort of permission to engage. But notice I wouldn't have sold this. Notice I would not have sold this, even though this is permission to engage. Why? Is this resistance? Is this resistance? No. No. This appears resistance. Okay? So now we're up here. Is this resistance? Yes. So now what I'm trying to trade is an oscillation, just like this. Now remember, the way that it works is for this oscillation to make a full cycle, it has to make lower lows, not lower highs. Lower lows, not lower highs. Lower lows, not lower highs. Right? And then notice in here it starts to tighten up. It stopped making lower lows. Okay? But why didn't it cross up? Well, it didn't make higher highs either. Okay? And only when it made a higher high did it cross back up. So now we're saying when we're at resistance and you're bearish, you will not have permission to engage until A, it stops making higher highs, and B, has started making lower lows. Oh my God. Becky, what do you think? What do you think? Is that one way to at least stay out of a bet? See, this is a bet kind of, right? Ali G's like, I bet you that's going to hold. Well, to improve the odds of the bet, I would wait and at least see the bulls get out of this before I decide to be a bear. Okay? And what will happen is, here we are at resistance, and there's your entry. Here we are at support, okay, and here's your entry. Are we at resistance? No. Are we at resistance? No. Are we at resistance? No. Okay? Are we at resistance? No. 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 Are we at resistance? Yes. Okay, and like I said, you could be more aggressive and call this a midpoint. And then in that case, you would use that as resistance and support as well. But that's not the scenario we're in now. Okay. In that case, you could have you could scalp this. You could scalp this down. See the right? You could scalp this down. No, 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 no. You could scalp this down. But notice there's scalps now. Okay. versus a proper range trade. All right? So imagine 35 to 50 hours of training like this. The link is in the description below. It's almost 80% off. And this is the last week it's going to be at that price. I'm in my last 72 hours of Harvard. Then I will be a master of financial management with a specialization in alternative investing. Yeah, cool. And then that price is going to change. So cool. Thank you for being on my team. Thank you for all the effort you put into being a currency trader. You are not alone. You have a whole community here at Forex.Today. I'd like to thank Traders Way for being our sponsor. I'd like to thank you for the comment you're going to leave on this video documenting what you learned. Thank you for doing that 5 or 10 minutes from now. And I will see you guys tomorrow. Have a wonderful day. Cheers.